Good day, everybody. Thank you for taking the time to view this presentation. With all the changes that are happening next year, including the new GAT rate, the phase-in, and the new contract, we've been getting a lot of questions on how all these new variables play a role in making a retirement decision. To address your questions, we have put together the AT&T Midwest Craft Pension Update. To begin, let's start things off by sharing an actual client experience of a retiree who decided to entrust his retirement savings with Voyage Financial Group. In October of 2011, an AT&T employee we'll call Jack came into our office to discuss his situation and goals. Jack had already retired and was eager to collect his pension lump sum. Now, if his financial advisor would not have been familiar with the specifics of the AT&T pension plan, he could have received a much smaller pension. By simply choosing to defer his lump sum into 2012 and waiting an extra 6 weeks, Jack was able to increase his pension benefit by $50,000, and that is a lot of money. Jack is not alone. Each year, we have several AT&T employees coming into our office that are looking to retire. Oftentimes, they've either heard a bad rumor, received misinformation that, if acted on, would have cost them tens of thousands of dollars. Today, we're going to talk about maximizing your financial future. My name is Ryan Dragstrom, a certified mutual fund counselor. I've been in the financial industry since 2002, and I'm one of the financial advisors with Voyage Financial Group. Kurt Anderson will be joining us in a few minutes. He has been in the financial industry since 1996 and is a certified financial planner. At Voyage Financial Group, we have helped thousands of AT&T employees, just like you, maximize their pension benefit and plan for a successful retirement. Today, we're going to discuss 3 key topics. 1, the GAT rates. 2, the PPA rate, also known as the corporate rates. And 3, the impact on your pension lump sum. And by the end of this short video, you will have a clear understanding of how interest rates will impact your pension going into 2013. With interest rates, regardless of what rate is being used, lower rates translate into higher pension lump sums. And the good news is that interest rates have come down over the last year. As a result of these lower interest rates, your pension lump sums will be going up in 2013 by 1 to 2%. As you know, the IBEW contract was extended by 1 year back in August 2012. And with that extension came no adjustments to wages, health benefits, or pension ban. So for those of you listening that are part of the IBEW, you will get a boost to your pension because of the lower rates, but you will not see an additional pension ban increase on January 1st, 2013. For those of you that are part of the CWA, not only will you get a 1% to 2% boost to your pension due to the lower interest rates, but you will also get a 1% pension ban increase due to the new contract. For non-management, the 2012 GAT rate was 3.02%. The new 2013 rate of 2.8% is a decrease by 0.22%. In addition to the GAT rate, we also must consider the second phase-in of the PPA interest rate, which will take place on January 1st, 2013. This makes calculating your pension lump sum a bit more complex. The new rate has commonly been referred to as the corporate composite bond rate, or the corporate rate, or the PPA interest rate. They're all referring to the same rates, which the official name is the Pension Protection Act interest rates, or the PPA interest rates. Starting January 1st, the second PPA phase-in begins, it will be 50% GAT rate, 50% PPA interest rates. The PPA interest rates are actually 3 different interest rates based on short-term, which is 0.97%, medium-term, which is 3.5%, and long-term, which is 4.6% corporate interest rates. Each AT&T employee will have a different interest rate blend based on life expectancy. The new 2013 PPA rates will also decrease at each of the 3 segments. Bottom line, even with the second phase-in of the PPA interest rates on January 1st of 2013, you will still see an increase to your pension lump sums of 1 to 2% because the overall blended rates are going to be lower in 2013 than they were in 2012.
Thank you, Ryan. This is Kurt Anderson, and let's take a look at a couple of pension estimates. Here's an example of pension estimates calculated from the Fidelity website. These scenarios are for someone that is 61 years old with over 35 years of service. Under Scenario 1, if he stopped working by the end of 2012, his pension would be $571,000. Under Scenario 2, if he works just one more day, retires January 1st, 2013, he would get the new GAT rate and PPA interest rates. His pension will increase by $10,500, or 1.84%. So bottom line, his pension will increase slightly going into next year. Now let's take an example of someone that's a little bit younger, or 53 years old. In this scenario, the worker is 53 years old with just over 30 years of service. In Scenario 1, if he stopped working by the end of 2012, his pension would be $594,000. If he worked just one more day and retired January 1st, 2013, he would get the new GAT rate and PPA interest rates. His pension will increase by $7,500, or 1.26%. So his bottom line is his pension will also increase by 1.26% going into next year. Now looking ahead at the AT&T PPA phase-in over the next several years. The next key date is January 1st, 2013, when we see 50% GAT rate and 50% PPA rate based on November 2012 posted rates. After that, January 1st, 2014 is the next part of the phase-in. It'll be 25% GAT rate and 75% PPA interest rates based on the November 2013 interest rates. And after January 1st, 2015, it'll be 100% PPA rates based on the November 2014 posted rates. The decision to retire can be complicated. Although important, the pension lump sum is only one of many significant factors that you should consider in planning for retirement. Others are quality of life, your required retirement income, the expiring AT&T IBEW contract, the length of time until you qualify for your Social Security benefits, and your current financial situation. Because these decisions are complicated, studies have found, like the study from 2010 by the Employee Benefit Research Institute, that only 46% of Americans have even tried to figure out how much they'll need in retirement. To help AT&T employees, Voyage Financial Group has developed an AT&T pension and benefit workshop. We have also put together a free educational packet with useful information, including Retiring from AT&T, a step-by-step guide, AT&T retirement facts, and 401k sample allocations. As you remember from the beginning of the video, with the real-life example of Jack. By simply choosing to defer his lump sum into 2012 and waiting an extra 6 weeks, he was able to increase his pension benefit by $50,000. And that is a lot of money. And Jack's not alone. Each year, we have several AT&T employees coming into our office that are looking to retire. Oftentimes, they have either heard a bad rumor or received bad information. If acted on, it could have cost them tens of thousands of dollars. Today, we've talked about maximizing your financial future. We've discussed 3 key topics: the GAT rate, the PPA rate, and the impact on your pension. And now you know all you need to know about how interest rates impact your pension going into 2013. And you have the tools to make important financial decisions. My name is Kurt Anderson, and with the other advisors at Voyage, we have helped thousands of people better understand their retirement decisions by constructing a detailed financial plan. If you would like us to create a personalized retirement plan at no cost or obligation, please call us at 877-353-8999. Thank you again for your time, and we look forward to hearing from you.